It's currently Thursday the 25th of July for me right now, and you'll be watching this video in the future, but I do want to talk about Tesla and more specifically Tesla stock because of course it's been very volatile, it's been falling, and I think a lot of people have been freaking out, and I just want to share my thoughts and opinions on what is going on right now. Yesterday alone, which was Wednesday the 24th of July, the stock was down by 12.33%. So what has basically happened is since the earnings were released, we have basically wiped out a lot of the gains that were accumulated over the last month or so. But it's important to note that this wasn't just a Tesla thing. Yesterday, on Wednesday, the whole of the market, especially tech stocks, seemed to be down. They didn't do very well at all. And actually, I think it was the worst day that the Nasdaq has seen for quite a while. I did discuss this and the Q2 earnings in a previous video. I'll link it on the screen now. But it does appear that investors, whether these are retail investors or institutional investors, did decide to sell some of their Tesla shares or even all of their Tesla shares post earnings. This could have just been that they were spooked by the earnings report, or it could have been that a lot of people were actually trading the event as well. Now, personally, I don't actually think that the results of the earnings truly justified such a sharp sell-off. It did actually seem quite emotionally driven. Perhaps some people were actually waiting for the chance to sell, and it definitely did flush a lot of people out of the stock. Tesla stock has actually run up quite a lot since about April time, and some people say that there wasn't really anything that made this increase justified. So perhaps, a stock pullback was somewhat due in a lot of people's opinions. However, I can understand why some investors, especially those with a shorter timeline, and those who are maybe seeing Tesla as more of a car company, might have reacted this way. Tesla's auto margins hit a low of 14.6%, which was down from 30%, I believe it was, in 2022, and a significant portion of their revenue was seen to come from regulatory credits. And some investors might have decided to sell out of their Tesla position because what they are seeing is an automotive company in decline. They are focusing solely on the automotive business segment. And if those investors have got valuation models that don't really account for Tesla's unrealized revenue streams, like from supercharging, the supercharger network, Optimus, full self-driving, robo-taxi fleet in the future, all of these things, then they might actually conclude that at current prices, Tesla is overvalued, especially when they add the new figures from the Q2 earnings into their models, and they might actually come up with a figure such as $200 a share. Maybe that's what they think Tesla's worth, and actually at the moment it's above $200 a share. So maybe they're thinking it's overvalued. It comes down to your time horizon and how you view Tesla and whether or not you think they are on their next growth stage. A lot of people have a lot of different opinions on whether or not Tesla is currently undervalued, fairly valued, or overvalued right now. One thing that I like to do is look at this forecaster.biz piece of software website, and it tells you a ton of different things about different companies, different indices. But one thing that I really like is this average fair value. So this is telling you the fair value by averaging some of the most used methods by different financial analysts. So you can see it's using the discounted cash flow method, the Peter Lynch method, and the economic value added method. And by averaging out these three things, it's currently bringing up the average fair value as 1.05k, which means at the current price of $215.99 a share, it is 387.37% below the fair value. And you can actually see in this graph here that it is showing us that there is a big difference right now between the fair value of the stock and what the stock price is actually at. I'm going to show you some other cool features from Forecaster later on in this video, but if you do want to try this out for 7 days, a free trial, do use the link in the description below. And if you do really like it during the free trial, you can also get 10% off with the code Haley10 at checkout, again using my link in the description below. Now, Tesla does seem to be one of those bipolar companies, a bit like Palantir, I guess. People either seem to really dislike it or really are bullish and convicted in these companies. There doesn't seem to be that much of a grey area. I don't know why that is. I guess a variety of reasons come into this. But on the other side, on the other hand, We have long-term investors, people with very much long-term mindsets, and these people seem to remain optimistic about Tesla's future. These investors are very much focused and excited about how Tesla are shifting their business model from relying entirely on their automotive segment in terms of revenue to actually focusing on autonomy and robotics. And that will, of course, change the margins, how the business is structured. It will change everything, the total addressable markets, how much money is coming in, all of that stuff. And then people say, okay, well, that's great. It's great that they're shifting their business, but here and now, right now, I can only see that the revenue is coming from the automotive segment and that's declining. So, I'm going to wait and I'm not going to invest until they have actually shifted their model. And that's okay. That's a less risky approach to take. But what I would say is actually, we are already starting to see this happen. It is not that far in the future. Right now, the automotive segment is taking up less of a percentage of the total revenue than it did in the past. For example, if you combine the energy generation and storage section of Tesla with the services and other, so these are the two business areas that are not the automotive segment, those are now taking up about 22% of Tesla's entire revenue. This time last year, they were taking up 14%. So clearly these two areas are growing, and we know this. We know, for example, that the energy segment is growing very rapidly and very nicely. And these people that are focused on the long-term growth of Tesla, they are focused on this shift happening. They are okay holding their position through periods of volatility whilst Tesla makes this transformation. They're okay with all this. These people are most likely to just continue to dollar cost average into Tesla over time and then maybe add some more when it significantly dips. As these people believe that Tesla's market cap and stock price will grow as they enter the next phase. And at $215.99 a share or whatever it is right now, they see significant potential for that to dramatically increase in the future. One thing that I like to think about is when in doubt, zoom out. And I'm talking about, if you just focus on the day-to-day periods of time on the stock chart or even week to week, you're going to see quite a lot of volatility when it comes to Tesla. And this volatility may look like this. And then if you zoom out to maybe a few months periods, a few years in terms of time period, you're going to see a very different, you're going to see quite a different shape in the graph, maybe a more stable one. And then if you zoom out again, you'll slowly stop seeing these little bits of volatility and you'll see something that looks more like this. So it comes down to your risk tolerance, how long you're holding your mindset control, and just how you view Tesla as a company. Are you truly believing that they are an AI robotics company, or are you still very much focused on them being an automotive company? Now, just thinking about the automotive segment right now, I actually think margins will slowly start to increase, but they will be, and the automotive segment in general will be quite dependent on the macroeconomic environment, election results, rate cuts, whether they come or they don't. Automotive is very cyclical, and I think a lot of people seem to just forget about this. And talking about cyclicality and seasonality, this is another thing that I like to use Forecaster for. So this chart here is showing us how Tesla's stock price has historically performed during different times of the year. And you can add different time periods as you like. I'm going to add the 10-year time period. I'm going to leave 3, 5, 7, and I'm also going to add last year and current. Obviously, depending on when a company went public, you'll have different abilities here. And each line that you're seeing, each color line is representing a different time period. Now, if we zoom in to the current time, what we can see is typically, and this isn't guaranteed, typically based on historical data, Tesla stock has actually been going down during this time. So when I say this time, I mean the end of July. And then it seems to start slowly increasing as we start August. And if even we zoom out slightly as well, and we look at it over a slightly longer period of months, late July to mid-September, you do start to slowly see an increase. An increase is the trend. Again, that doesn't mean it's always going to happen. And you can actually see that if you look at this year, which is this pink line here, it has been a lot more volatile, and it's actually been a little bit different from other years. And maybe this is due to changes in Tesla's business structure, how they're shifting. Maybe it's due to the big AI push, the AI revolution. It's an election year. There's macro factors. So you can't guarantee that just because something has done something before that it will do it again. But I like to use this more so to work on mindset. I'm not necessarily trying to use this to pick my entry points and when I'm going to trade the stock or anything like that. I'm very much holding Tesla for the future. But it's good to be reminded that actually it is a normal part of investing. The market has cycles. It's natural. We see this cyclicality in nature, we see it in the stock market, and like I keep saying, the automotive segment in particular is very much dependent on seasons. Now, I'm still very much focused on the long-term growth potential of Tesla. I still think this is one of the best risk-adjusted investments in the market. It's still my largest position. I'm still happy to have it this way. I'm going to continue to add. And I just think this is just short-term volatility. This is a short-term reaction. I don't think this is going to matter in the future. Yes, it does introduce some volatility. Yes, it's a little bit risky than a very safe stock, maybe a utility company. But I'm okay with that. I've weighed out the pros and cons, and I'm very much convicted that Tesla is still in line to successfully transition its business from, being an automotive company to being one of the best real-world AI and robotics companies. Now, right now, actually, Tesla stock is still above my average price. So what I'm doing right now is I'm just continuing to dollar cost average in. If it does drop lower, I'll probably start buying more aggressively. But one thing that I'm not doing is freaking out. I'm very much focusing on my own research, what the company is actually doing, how they're progressing, the long-term growth, the new markets that they're going to be entering, the numbers, what we're seeing right now. And there has been a lot of positive stuff as well. People always focus on the negatives. With that said, I do think there's going to be a further period of uncertainty, instability, volatility. I think this is normal. And I think it's especially normal when a company is shifting so much. They're entering markets that have never existed before. They're doing things, innovative products that have never been seen before. This worries a lot of people. It's going to be uncertain for quite a while. And also Tesla are going to prioritize their growth and their future growth right now, maybe over their profits. This makes analysts uncomfortable. We know this stuff. But remember, if you want to check out Forecaster, I have got a link in the description. That link again will get you a 7-day free trial. And if you like it, you can use the code Haley10 at checkout. Thank you so much for watching this video. Do let me know what you're doing and how you're feeling about Tesla in the comments below.